let's take a look at some information on Chainlink for Brave New Coin. Chainlink is a decentralized Oracle network, one of my favorite use cases and one of the most obvious cases of a coin that is divorced from its fundamental use case. You do not need the token to operate on Chainlink or use Chainlink in any way. So keep that in mind, as is the case with most of DeFi. The token and the actual service is not linked, no pun intended, whatsoever. They're also multi-chain, they're on Polygon, they're on BSC. That has had no impact on price. If the token was connected with the use case, you would expect this to have some impact on price, I would imagine. Chainlink is hiring, I'll get to that in a second as well. How this works is you can connect any data source with any event or other data source. This is classified as middleware. Chainlink is any chain that is supported, AVAX, Solana, ETH, BSC, and I'm sure that list will grow. But again, you do not need the token to participate in this ecosystem whatsoever. And again, not disputing the powerhouse that Link has been from a protocol perspective. Here's BNC, very early movers here, Q4 2018. So yes, they have tons of ecosystem support. They're supporting tons of stuff, even Enzyme prices. Any price you see in DeFi land on any app, dApp, whatever, is probably pulled from Chainlink. And you can look at these feeds individually. They have tons of them, over 700 Oracle networks at this point. Here's a full list: Arbitrum, Avalanche, BSC, ETH, and you can look at what feed is on which chain. You can look at which dApp is used here for link data, that sort of thing. And individually, these feeds pull prices from semi-trusted sources and then aggregate that within a deviation threshold. And it needs a certain number of responses. So it has a stopgap for failure here. But this is a highly valuable and maybe the most important use case in all of DeFi, because without this, without trusted prices, then most of DeFi would just collapse, because you'd get all sorts of liquidations and margin calls, and loans would be out of skew and out of whack, and lending and borrowing prices would be all over the place. Again, not disputing Chainlink as a protocol. Love it. We wouldn't exist without it. Highly important. Okay. The token is where I draw the line, because here's the token supply, 47% in circulation. This is the holding company, Smart Contract Limited. Over the past couple of years, they had been selling at increasing clips per month. And apparently, staking is coming. This is a high promise for many years. I don't know, every month I look at this, I hear more and more that staking is coming, staking is coming. And the idea here being is that we lock up some of this circulation and pay people in this uncirculating supply. I guess it could be bullish. It doesn't scream bullishness to me, because we're just unlocking more rewards. It depends on the percentages here. If you look at, again, other stuff in DeFi, like Comp, like Aave, like Balancer, where they're incentivizing people to provide TVL. Now, it's not proof of stake. It's not staking per se, but that hasn't exactly been bullish for them, right? So I wouldn't assume blanketly that staking is going to be bullish, because you're just dripping out more supply, right? As is, more than 50% of the supply has yet to be released. So keep that in mind. One thing I thought was curious, assuming my data is correct, assuming data from CoinGecko is correct, which is where I'm pulling the wallet data. But the reason we even know that they're selling is you can look at their wallets on chain and see that they're moving coins 3 times a month. At least they had been at 500,000 per transaction. And it appears they've halted those sales. So Merry Christmas, Link users. They're no longer dumping on you. They also sold less than they had been selling in November. So I don't know what the reasoning behind that was exactly. Maybe some metric that they saw said they should stop selling here, which is smart, because they're only going to perpetuate a bear market if they keep selling as prices are going down. And this on its face isn't even wrong or terrible. It's just people don't realize that you're getting dumped on. You have the community and perhaps the company or the people behind Chainlink telling you, you should hold our token, whereas they themselves are selling it. It's just a bad look. Not only are they selling it, or were they selling it, they were selling it at multiple millions per month. Does this give them runway? Can they hire people? Blah, 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 biz dev, blah, 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 blah. Yes, I hear it. I get it. All I hear in the comments is this, okay? That is not even the point. The point is we have a token and they are selling it. End of discussion, okay? That's where it begins and ends, is supply and demand. And we saw that in the price, certainly for Chainlink this year. Looking at transaction counts falling, certainly not bullish for anything. Multi-month lows, close to multi-year lows. So that on its face, certainly not bullish. You can't be bullish on that. Average transaction value is rising here as ETH fees are rising. No surprise. Any ERC20 token should have rising average transaction values. But the most concerning is definitely decline in transactions there, as well as decline in active addresses, which is now at a multi-month low. Any bullishness that existed between mid-2020 and mid-2021 certainly has exited the building. And in a bear market, in the depths of a bear market, what you want to see as a buyer is active addresses declining to multi-year lows, to 2019 lows. You want to see everyone writing stuff off, not caring about it, right? That's the best time to buy, when there's just this blasé attitude towards most of this stuff. Now, will that change the protocol use case connection for me? No. This is pure speculation. This has nothing to do with the use case. Because you don't need Link to operate in the system, it works flawlessly without the token. End of discussion, right? But if this was bullish, you would see active addresses rising. NVT is low and falling. I don't like NVT as a metric on anything, let alone DeFi. But it is what it is, right? If you want to be bullish on something, there you go. It's declining. Looking at MV/RV versus price, a metric I prefer when I'm looking at economic utility relative to market cap. Most coins top out at around 2x multiple in a bull market. And for Link, that hasn't really been an exception. All of these highs, you've seen warning signs of overbought. Maybe this was incorrect or non-correlative on the most recent high, but you could also look at this as a bearish divergence. I'm not saying this in hindsight. I'm just saying, like, yeah, a sell at 33 is also fine. Sure, it kept going to 48, but at a 2x multiple, it was telling you, yeah, it's probably a good time to start letting your foot off the pedal here because it's getting overbought. During the May-July or June-July lows, we got below 0.8, 0.7 there. Currently, we're around 0.9. I would love to see this, much like transaction counts and active addresses, in the depths of a bear market, breach 0.7, breach 0.6. You know, I want to be super sure that this thing is oversold, right? Multi-year lows on MV/RV before I can comfortably jump in and just hold it regardless. You just want to see a massive divergence in what's happening on chain and what's happening with price. That's your best opportunity most of the time, if MV/RV is correlative on backtesting, to start to jump in to stuff like this. Chainlink Google Trends flat over the past few months, not at all-time lows, just sort of unexciting. Not too much going on that front. Flipping gears to technicals, this is the pitchfork in the colored diagonal channels there. 1 year MA in the green, 5x that in the red, midline in the white, and the 50 and the 200 on here. It's kind of busy, but all this boils down to we are below the pitchfork, so that rate of change is nullified. We are below the 200-day moving average. We have a death cross on the 50-200. We're below this potential ascending triangle, well below that at this point. And we're getting into the buy zone or the bear market portion of the MA multiplier. So as we sit here in a vacuum, the most bullish thing that I'm seeing is the team stopped selling. Okay, so that was clearly not bullish for price. I don't care what you say. Again, you can spin that any way you want. The point is you're getting supply unlock. Supply unlock is not bullish. Look at Wi-Fi. Wi-Fi bought a bunch of tokens. Does that mean the use case is any more sound or the token is worth more? No, it just means people are bullish on that. Again, Wi-Fi, love the protocol. The token makes no sense to me. The creator of Wi-Fi has even said the token makes no sense, right? At least he's honest. Andre, I think, Cronage, I forget how to say his last name. But the point is here, no selling should ever be viewed as bullish, period. Okay, so if they start ramping up their selling again, I get less bullish. But where this sits on the MA multiplier, yeah, sure, you could buy here. But ultimately, I want MV/RV in the dumpster before I think about touching this thing again. It had a multi-year run. It needs to relax a bit, it needs to cool off. Then we can talk. But right now, I think this goes lower. I definitely like sub 15. There's plenty of reasoning for support at 1250. Yearly pivot down there. The July low down there. There is a bullish TKC clamp here in that mean reversion as possible, but that isn't something I'm willing to just jump in on blindly. You know, a lot of DeFi looks like this where it's sold off significantly over the past month. It certainly looked much more bullish up here when we were having a bullish Kumo breakout with an ascending triangle that didn't go anywhere, right? Then all of a sudden I'm supposed to get bullish because we're showing all this weakness. Collectively, I think just DeFi needs to relax, needs to chill out because none of this stuff, the use cases just don't make sense for the tokens. That's ultimately where I see the flaw here. Link BTC, I called this months ago, head and shoulders. The Link BTC, the Link crowd, the Linkers, the Marines said I was paid by Nexo or paid by somebody else, which is a bunch of malarkey. Based on this chart pattern, we're certainly bearish. Based on trend metrics, we're certainly bearish. Just as we were bullish when we were above the 200, we're bearish when we're below. This isn't rocket science, people. And yes, I like lows down to 15K sats based on the measured move. Do we get there? Maybe, we'll see. It'll probably be a slow bleed if we do, but that is where the pattern measures to, and Link ETH also showing signs of a bullish TKC clamp. Kind of a volume support here with RSI, mega oversold. I don't hate this as a mean reversion play or attempt to the Kijun or the 200 or the cloud, but ultimately certainly not bullish. It's pretty clear, again, we're above the cloud, we're bullish. We're above the 200, we're bullish. We're below, both, we are bearish. The expectation is lower lows. That's just how this works. The expectation is consolidations very likely will continue to break down. So this might base here, but I wouldn't get too bullish on it. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.